Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Hope you're having a good day. Welcome to our show. We're financial advisors here at Jazz Wealth. I wear the shirt every day because I hope you go to the website and check it out. It's kind of like marketing. I think you get it. So I hope you'll check us out there. Also, if you can't be one of our customers or don't want to be, you can go to our research site, jazzwealth.com/research. But this show today is just to go over the stock market, teach you something new, share some interesting data or something that maybe you haven't thought about or are not looking at, and give you an update as to how the markets are going. You can see on the right-hand side of your screen how the stock market is doing today. We are now about 2% away, less than 2%, from hitting new all-time highs in the S&P. The NASDAQ, by the way, has hit new all-time highs 31 times since, recovering from the virus decline there. So kind of interesting. The markets at the moment, all positive. They don't really seem to care about, evictions, foreclosures all coming. Shared some data about the foreclosures, of course, with you. No stimulus, unemployment ending. Yelp data, did you see the Yelp data that 50% of all restaurants that closed for the virus did not reopen? So the markets don't seem to care about that. JP Morgan, Bank of America, they put out credit card spending information. That's all plateaued, right? Nobody's out there spending anymore. They're pulling back on that. So it could be some interesting times ahead. But in the meantime, we've got a stock market that's moving higher here. If you look at the S&P on the screen, I mentioned just a minute ago, yeah, you got just about 2% left to go. From here to here, we got to back it down. Here to here looks like just over 2% after hours there. But looking good, just a slow, steady move higher there today. The Dow was the big performer. Well, I would say the Russell's the big performer, but the Dow got the attention, mainly thanks to Disney. Disney had their earnings there. Banner day for Disney, at one point up over 10% on the day. Boeing was in the mix as well, by the way. Boeing's a great recovery there. We'll cover that here in just a little bit, but obviously recovering from that decline. We talked about that the other day as well. And one more that I'll point out, not really like amazing in terms of what's going on there, but if we take a look at Visa, this is that one, right? Back up towards the top of this range. The credit card issuers, the fintechs, they call themselves, moving back towards the highs of those range. Maybe something setting up there. I don't know. I mean, just something to point out to you. In the Dow, that was the excitement today, or at least some of the excitement. If you look at the Russell, we're going to cover the Russell a little bit. In our research site, I did a new post this morning on finding stocks in the Russell. I'll help you guys with that here in just a second, but we'll cover that. The Russell looking really, really good overall. Is a kind of a big winner today in terms of beating out all the major indices there. Banks were the reason for most of the gains there, or one of the big contributors. Here's the regional banks. Not all of these are Russell 2000 stocks, but regional banks getting a nice little boost today, 2.5%. So that was part of the reason there. And like I mentioned a minute ago, the NASDAQ, since breaking this high, the recovery high there, had hit new highs 31 times. So clearly that is the beast out there, if that's what you're taking a look at. What we'll do here is we'll go over and share something interesting with you. I don't know if you care about this sort of thing, but if I take a look at the charts here, we're going to see performance at Robinhood. They publish all their data and all that. You can get anything up to them, I believe, every 5 minutes. And so we just thought we'd have some fun, pull up some of the data here. Here you go. I'm going to play a little bit of creativity. I'm going to go like this, and we're going to make this bigger for just a second. And, let me delete that. There you go. If we look at Robinhood accounts over the last month, the biggest increases, where'd they come from? I just want to make sure you can see it. There you go. Biggest increase percentage-wise in the number of accounts that hold positions was on a ticker symbol FE. They saw a big pop there in the number of accounts. When the stock fell because of that class action lawsuit going on there. You might remember that day. It was just a massive decline there. Robinhood buyers said, hey, we like that. We want to participate in that. What's funny is if I go back here, and we just delete it. That's also over the last week the biggest decrease overall. So people dove in, they got a little bit of a pop, they took their profits, 16% less account holders at Robinhood holding that. If I go back over here to this guy, you've got VAR in the mix as well. They spiked. I don't know why you guys are buying these if you're at Robinhood. That's a buyout, by the way. The stock is done. If the deal falls through, the stock will fall. If the deal goes through, it's here. This is where it's going to be. But for some reason, Robinhood buyers spend a lot of time focusing on that. I found a few interesting ones here. I know Robinhood traders like the dips in general. Intel obviously was one of those that did dip. I found Sherwin-Williams to be kind of interesting in terms of increasing there. That's momentum traders there. Sherwin-Williams, one of the stronger ones in that consumer discretionary space. And the home builder space, I should say. So that was kind of interesting there. And if you look over the past let's get rid of this guy. We'll go over here now. If you look over the past week, who is everybody selling at Robinhood? I put the list up there for you. I found Gap kind of interesting. Small decline there in the number of accounts that are using that. People just giving up on Gap, I guess. I don't know, the retailer. That one hasn't really done a whole lot, just kind of recovering here. Maybe some people deciding to take some profits overall. FE gets put in the mix there. Pulte Homes, a little bit of a decline. And Maxim, I found that kind of interesting as well, if you happen to be looking at that. Maxim on the earnings pop there. Looks like over the last couple weeks, people have said, all right, we'll just go ahead and take the profit there. Maybe a winner for the Robinhood traders. So good job out there if you're looking at those. Biggest decrease overall, I don't know if you could see this. I'll just maybe leave this one like this. Biggest decrease coming in DXC. Remember, we've talked about this one here. Was on one of our scan lists one day, as yesterday, I think. Stocks that have shown a good last month, but ultimately are underperforming. So Robinhood traders apparently taking some profits there as well. That had a good move over the last month, which we highlighted for you. The Gap, which is obviously in the mix as well. Limited Brands losing some interest there. And some of the oil exploration companies, Apache and Halliburton, stick out. Biggest increase over the last week was in VAR. So like I mentioned, just looking pretty strong there. I thought just kind of fun to talk about that sort of thing. I don't know. We could get in more detail, I guess, if you guys like that stuff. But coming up, what I'm going to cover here is finding stocks in the Russell 2000. I'm going to highlight what we talked about in our research site as far as the post goes there. Help you guys with a watch list. So if you're looking at the Russell 2000, you recognize, hey, look at that thing right down here. Doing really good. Obviously, it's doing better and it's starting to outperform. If you look at the Russell 2000, it's actually outperformed every index besides the NASDAQ. Nobody's beating the NASDAQ right now. But what we're going to do is look through some stocks there. Before we do that, tomorrow's class for customers is going to be on the 4-for-1 stock split from Apple, how that affects the Dow, how that affects your investments here, the portfolios, what changes will be made there, and what effect does that have? First of all, what does it mean? How does it have an effect on it? It does have a little effect, so I'm going to go through that, share some geeky details with you. We've got some FinTips videos up on the YouTube channel there as well, TSP Lifecycle Funds, and why maybe you shouldn't be maxing out your 401k every year as your sole retirement investment vehicle. Just kind of a fun, quick video. If you're not familiar with our FinTips, those are just real quick videos, 6-7 minutes, really teach you something and get out of the way. And then, of course, got our post on the research site. Let's go over to the sector breakdown here and take a look at what's going on, because you got a lot going on there today. Industrials were the leader, breaking above the 200-day moving average. We gave you that list the other day of stocks that were outperforming already and starting to move. UPS, probably one of the better ones out of the group there. But the industrials moved higher today largely because of Boeing. Boeing, great recovery. You just can't complain there. That breakdown on lower volume was clearly the sign overall. Union Pacific stands out as one of the stronger ones as well, second best performer in terms of contribution to the sector. Union Pacific nearing back to these prior highs there. It's also one of the stronger railroads at the moment if you were to compare all the railroads. Moving over to basic materials there, almost hitting new highs on the day. One of the leaders as well. You got a broad rally overall. A couple names that stick out. Lind, this is one we've talked about numerous times, looking strong there, one of the bigger contributors. Also, Newmont, it's a gold mining stock, doing well because of gold continuing to rally. I'll also point out DuPont, kind of an interesting technical pattern. I don't know if you like this stuff, but right around the 200-day consolidation here, pinching a little bit higher ever so slowly, getting a little bit more attention, and we like to see that it was strong with the sector today, did outperform just a little bit. Over to energy, you got a 1% gain on energy. That is higher today. You got 2 straight weeks of inventory drawdowns as far as the Wednesday reports come out. Also kind of a broad rally today. I think Marathon was the only one that didn't participate. Everyone else was higher today. Marathon down 3.3%. They've got a deal in the works right there, so a little bit of weakness there. Devon Energy was the best performer there. Biggest gainer, that was earnings related, by the way. 8.5% on the day. They lost less than expected, so kind of an interesting pop for them. ExxonMobil, there you go, up 7% in the last 4 days. One of the biggest contributors to the rally in the XLE. Moving along, you got the banks today. They're teasing you again. The banks, like we've mentioned over the last couple weeks, one day it feels like they're going to break down. The next day it feels like they're going to do great. Well, today's one of those days you think, oh, right, they're going to wake up. This is going to be great here. We'll see. You got AIZ. Assurant is one of the stronger names. It was the strongest one today, 14% higher on the day. Biggest gain since 2008 for them, and that was largely due to earnings, and they guided higher. That's important. They guided higher. Prudential also strong on the day, 6% gain, beat on EP earnings. They are trying to save $140 million by the end of this year. They said, we're on track to do that, maybe even a little bit better. Investors like that. Over to REITs. What happened today is anything interest rate sensitive did not participate. Very weak. So you got REITs got a broad weakness there. Overall, you got higher rates, interest rates, as bonds pulled back just a little bit. And utilities pulled back for that matter as well. Still trying to get above the 200-day moving average. Back to REITs real quick though. You've got public storage. That was one of the weaker ones today. Lower earnings, I think, come out. They should be out by now. They missed on earnings by what, 21 cents? No, would be 19 cents. Missed on sales as well, so maybe somebody knew that or had a feeling going into that. That one was lower and is lower, so that earnings is out of the way. Extra storage space also lower on the day, 2.7%. Earnings were just okay on this one. And Vornado Realty, the other day, this little pop right here is because of Facebook leasing some space from them in New York City. That just kind of starting to fade away. No real good news for them in terms of momentum for that to continue. Lastly, I'll point out the VIX. VIX continues to just grind lower. That's a good thing. If you like the markets higher, you like the VIX lower. So continues to grind higher, still remains quite elevated considering over here we were at new highs in the stock market. VIX is around 13. We're still hovering at 27, and where's the stock market? The stock market's got less than 2% to go back to highs there. So volatility is still expected to remain high, and investors are still expecting volatility. They're just not getting it. So day by day, that thing just kind of blows a little bit lower. All right, going over to new highs, new lows for the day. You got 43 new highs on the day. I don't go through all of them for you if you don't need me to, but Freeport breaking out to new highs, looking pretty good there. Well, we talked about Lind already. New highs, kind of a weird little breakout overall. Sloppy at highs, a little extended there. Monster got a good breakout there. We happen to own this one, so we're excited to see Monster higher. Obviously, a good sign for us. They beat on earnings, looking good. They largely are thinking of staying away from the hard seltzer kind of thing going on there. Procter & Gamble is also, I believe, the bottom one on our list there. A little bit extended, all right? This is a consumer staples stock that is beating the S&P year to date and over the last year. So kind of interesting. Those consumer staple stocks known for being a little bit slower. Procter & Gamble most certainly not doing that. And as you can see, there's no new 52-week lows on the day. That's really it. Let's move on over to the watch list here. Here's what we're going to talk about today. Russell 2000. Anytime the Russell 2000 presents itself as being exciting, interesting, or something you want to invest in, I always get the question, Dustin, I have no idea. I don't look at the Russell 2000. What do I do there? Volume is a very important consideration in the Russell. Did you know that many of the Russell 2000 ETFs don't actually buy all the stocks? They do something that's known as sampling, where they're able to replicate the performance without buying all of the stocks in there, which further confirms that if you want to beat the performance of an index, you just have to replicate a certain mix of stocks and stay on it, actually. But anyways, the Russell 2000 actually very strong on the day, starting to wake up overall. What we're looking for today is we want to find stocks that are doing better than the Russell, but not too much better, right? So here's the thing. Russell 2000 down about 8% still year to date, so we want to find stocks that are down 8% or less, 7%, 5%, 1%, or show a profit. Then what we wanted to do is we wanted to find those with positive gains over the last month. However, we don't want to find stocks that are already so far gone that we missed the trade. We want to find stocks that are showing relative strength, meaning they're beating the index, and we want to find stocks that are still, viable, that maybe there's something interesting we can do there. So what we said is we don't want to see any stock that's over the last month has gained more than 10%. Why'd we do that? I taught you in the research section today that we don't want to see stocks too far from the 20-period moving average, and it's an easier way to kind of filter that out. So Tupperware is a great example. Russell 2000 stock, it's up 13% just today. Great move for them overall. But over the last month, of course it's positive, right? It's beating the Russell 2000 year to date, but a lot of that's already happened. So we found a stock here that maybe we missed the trade. And another example would be something like Kodak. Holy cow, right? You want to participate in that? Of course it's beating the Russell and everything. So by filtering it out that way, we're actually finding stocks that are close to the 20-day moving average. So I gave you a little watch list here, and then in the research section, I posted all 20 of them because what we did is we found, I went through how we did it. So we filtered out the stocks. We had a big list. We then put extra criteria on it. We made the list smaller. We got down to 103 names that fit our criteria. Then we said, remember, volume is important on this one. So we said, show me the ones with the highest average 30-day volume. That led us down to 20 stocks. I shared those on the research site. I've given you 7 here today that you can take a look at. You got Viking Therapeutics here, obviously fitting the criteria. It's a biotech stock, so careful there if you're not familiar with that or don't like that section. Stag Industrial, this is a REIT overall, looking to break out. Not too bad there. I don't know. I think it looks pretty good. HCSG. There you go. You got Healthcare Services Group. This is like a facility center. They're not participating in healthcare. It's kind of an interesting company. But anyways, that stock fits the criteria as well. You can go through the list there and just take a look. What I wanted to do was filter in stocks just to give you something to look at, let you do some research, see what interests you. These stocks all will have volume, 30-day average volume that is at least the highest out of the group. Some of them will still be low. You want to make sure to take a look at that. But that's kind of what we're doing there. That was kind of a simple way to very quickly find a small group of stocks in the Russell 2000 in case that continues to be a strong area and you don't want to buy the index. I mean, you could just go buy an index ETF, but what if you wanted to fine tune it a little bit? How could you fine tune those numbers? So there you have something a little interesting for you to dig in a little bit deeper. Moving over to some of the stocks in the news overall, you got there's a fair amount of stuff going on out there. Nikola, down 10%, was down a whole lot worse there. More losses than expected. They don't make any money, so we know that. More loss than expected. They still have plenty of cash in the bank, so they say. Here's the interesting thing about Nikola. If you're investing in this company, they say they're worth $14 billion. All right, that's fine. They made $36,000 in income. A company's worth $14 billion, and yet they only made $36,000 in income. That's not enough to run the company, so they're operating at a loss. I don't think that's new news to you. And the income is soon to be $0 because the plant that they did use to produce the $36,000 is actually closing. It's a scheduled close. It's not like closing forever. So they're not going to have any income. And the CEO came out and he's like, yeah, we get it, right? We don't have any money. You're investing in us now because of what we're potentially going to do. So just keep that in mind. You're investing in a company at a $14 billion valuation. They've made $36,000. Just take a second, if you would, and imagine that you went on Shark Tank and you pitched that to Shark Tank and you wanted them to invest in you and you have $36,000 in sales and you're saying, we think we're worth $14 billion. Where else, how would that go? Could you picture that conversation? Would you imagine that episode? Probably be the most watched episode ever. Anyway, so I'm just ranting. And what's interesting is more Robinhood traders own this stock than own the SPY, which is the S&P 500, most popular S&P 500 ETF there. So yikes. Come on, guys. Disney, we talked about this already, strong. Beat on earnings, missed on revenue, beat on every metric. We talked about this yesterday. Besides the Disney Plus media, 60.5 million subscribers now on Disney Plus. ESPN Plus actually up to 8.5 million subscribers. That's double than expected. The parks were the weak spot there. Largely expected. So we put those numbers behind us. Everybody knows what's going on. Beyond Meat's down 6.7% on the day, missed on earnings. Our earnings were basically as expected. That wasn't really a miss. Food service, that was their weakness there. Not good. Not looking good there. Hey, Walmart was the weakest stock in the Dow today. That was in the news. Walmart Plus has been delayed yet again. But good news, even though that's delayed, which is the Amazon Prime competitor sort of thing, that's delayed yet again, kind of like Intel delaying their stuff. But the good news is if you live by one of the 160 participating stores, you can drive to Walmart, not go in the store, and just watch a movie. They're going to do a drive-in movie theater for 160 stores. You can watch movies. They even listed out all the movies. So if you didn't like Walmart enough already and hanging out there, now you can hang out in the parking lot. There's not a chance that I would do that in my area. I would not do that. Sorry. But yeah, go watch a movie at Walmart. Why not? Match.com. Yeah, you guys are all dating online and stuff. Match.com killed it, up 12% there. Earnings beat, revenue beat, total number of paying members much higher than expected. Everybody's online dating, right? You can't go physically date, so we just do this online. Who do we use? We use all of Match's products there. It's not just Match.com. They own a lot of other services as well. Well, there you go. Anyways, earnings coming up tomorrow. Bristol Myers, Cardinal Health, Dish, Mylan, Biotech, Mohawk, who else? T-Mobile and Uber. You got Starbucks paying out 41 cents, Intel paying out 33 cents if you still own it, and JB Hunt paying out 27 cents overall. I'll take a second here and try to answer some of your questions, and then we'll wrap it up. Remember, no show on Friday, so we'll come to you tomorrow, help you out, teach you something new, give it one last full shot, and then we'll be on our way. We won't have a show on Friday there. A Walmart in Florida. What could go wrong in Florida? I'm sure that's one of those fun Google search terms. A Walmart in Florida, enter, and you'll probably find something interesting. Yeah, we have that stereotype of being a little wild down here. It happens, you know. You just roll with it. I love it. You bought Facebook, Microsoft, Apple, Adobe. Cool. Did some buying today there, huh? I see. Yep. You think there'll be the market's really shaking off some of that data. Now remember, the markets respond faster than ever to data. So as we get foreclosure numbers, hell, retail sales. If we get retail sales number, that's a more current type number. We get that number and that shows weakness. You very quickly have a recipe for a market that could say, oh, wait a minute, we need stimulus. We don't have stimulus. They can't agree on something at the moment. Everybody is going to start getting evicted, foreclosed on, and all that great stuff. Yeah, it could be a very interesting turn of events there. We'll see. Roku reporting after hours there. They were positive. Stock's actually down 1.5% overall. Total revenue per user was the metric that seems to be standing out on my algorithm here. That was the big beat. 2.3 billion hours extra watched. There was a total of, in just the last quarter, 14.6 billion hours. Whoa, revenue up 46% because the revenue per user was very strong as well. They added 3.2 million active accounts. Hey, what do you want? We're all sitting at home, right? Just having a good time. Also, Etsy killed it. Etsy, jeez, good earnings report for them. Earnings 75 cents overall. Nice profit. Yep. Active buyers up 41%. That's year over year. That's a big move for them. They're actually breaking out their earnings based on masks and not based on masks. Kind of an interesting, just at first glance here, kind of an interesting earnings report. That's odd. Yeah. 75 cents is what they had, 39 cents expected. Revenue came in 428 million, which they were only expecting 328 million. That's a nice beat there. They are firing on all cylinders for Etsy. It's basically flat after hours at the moment. It could be a conference call coming up. Yep. I love it. Well, Mohawk's got earnings, so you've got that thing to deal with there tomorrow. Mohawk's earnings expected to come in small loss, 9 cents, 1.8 billion. It's a crapshoot, you know, where it ends up for earnings. Let me see. Expected move $6.63, one way or the other. So you basically got a small little range there. $6.60 range is what traders are currently pricing in for the move on Mohawk. We will see. Yeah. Yep. Is the market's growth completely irrational given the pending economic downturn? Well, technically the economy is in a downturn and the market is responding ahead of that, looking towards the future. This earnings season has been all about the future and less about, it's kind of rough out there right now. So because of that, you have people buying stocks feeling that they're at a discount compared to what they will be in the future. I don't know. We'll see. We'll see. Which SW product do you use? You talking about my hair? Talking about what Suave product do I use? Is that what you mean? I don't know what the question is. I'm not quite sure. I'm not sure. We do happen to own Disney, so happy to see Disney moving higher as well. We already owned it, so it's not something that we added to today, but good for them. Yeah, good for them. Park attendance is an issue. It's an issue. They're open, you can go do your thing, but people are not doing it down here in Florida. They're not doing it. I don't know. I'm going to attempt to go to Volcano Bay on Saturday, which is the Universal's theme park, because I had some friends that went and they said it's dead. There's nobody there. You may remember I went to Islands of Adventure and Universal about a month and a half ago. Dead. I posted pictures on my personal Facebook page. It was like us and maybe 400 people in the whole both parks. So we're going to attempt to do the water park there. Yep. We will see. What software do I use? For what? There's like 10 different things going on. I think you mean the charts. That's just Thinkorswim. I just use them because they got a nice clean layout. It's easy for me to share. I'm testing out a few others. We're trying to make a little custom one here, but yeah, I think that's what you're asking. No, we tried to order the Floby. They were sold out. You can't buy the Floby. You got to go on eBay and pay somebody like $700 for it. Yeah, during the whole downturn. If Floby was a public company, that would have been the one to invest in. There's no Flobies. That's all I wanted. I just want a little vacuum haircut. All right, I will wrap it up there before we get a little out of control. Hey, have a great rest of your day. Thank you so much for watching. We'll be back tomorrow. No show on Friday. And we'll see you later. Adios.